Alright, guys, let's talk about the US China trade war because it's not over yet. And let's start things off with a joke. Apparently, Trump believes that China wants to be part of the United States.
My relationship with President Xi is great. It's been great for a long time. We've had a very good relationship.
In your meeting with
If we don't make a deal, we'll set it. We'll just set the number, and think they'll want to be a part of the United States. We're doing great. This is the golden age, as Paul said. We're talking about the golden age. There will never be a time like this, in my opinion.
And now that we all had a good laugh, let's get serious and talk about the financial decoupling today. Now, earlier on, we talked about how Trump caved and revealed his cards in the trade war. He will be bringing down the tariffs on China substantially. The 145% tariff rate isn't going to stay, and it will get slammed down or the economy would literally implode. But China just doesn't care. The wheels have been set into motion and Beijing realizes that Trump is actually a gift to the country. He has set into motion the economic divorce and that just won't stop. China is aggressively cutting off new investments into private US companies. Chinese state-backed funds are not pumping in money to US PE firms which are already starved of capital. And remember the backdrop that we are heading into. The odds of a US recession are extremely high. We have major banks and investment firms saying that the chances of one is anywhere from 60 to 90%. Private equity firms invest into risky ventures that could go wrong in a hurry. This includes private companies, infrastructure projects, real estate, and startups. And unlike public markets, it's nearly impossible to exit without taking a big haircut or selling at a huge discount. Now, if the public stock market is already suffering and money is already leaving US assets, imagine how much harder it is for private equity firms to raise money. I guess Trump's buddies at BlackRock won't be too happy about it. China is just cutting off everything, and financing their projects is about to get very, very expensive. Now, Chinese wealth funds have been investing billions of dollars into many US PE groups over the years. This includes Blackstone, but we are now witnessing a dramatic shift away from investing in the US. Chinese money is flowing to non-US countries, including Saudi Arabia, France, Italy, and even Japan. For Beijing, it's all about diversifying their portfolio away from their biggest adversary, which is the US. And when Beijing tells their wealth funds to do something, those funds simply say, "Sir, yes, sir." It's top-down control. It's the classic command economy, especially when it comes to anything state-owned. It's easy to assume China will continue funding US PE firms if the trade war ends, but I don't think that's gonna happen. Firstly, the economic outlook of the US is really looking bleak. Across the board, business activity is the weakest since 2023 on the tariff war. The flash output gauge has fallen from 53.5 to just 51.2. We are dropping down to the contraction zone, which isn't good at all. As an investor, you want to hold back on allocating money. Once again, the illiquid nature of private investments cannot be underestimated. Getting into a deal is easy, but getting out is a whole different matter. It can take months or years, as you'll probably lose money as a distressed seller. With the US about to slip into recession, the last thing you want to do is to blindly invest there. Chinese wealth funds won't want to put money there, and we are talking about a lot of money. CIC is one of the world's biggest sovereign wealth funds. China funds this using their trade surplus. In 2022, their net assets were over $1.2 trillion, and 47% of which are used for alternative assets, and that includes private equity investments as well. Without Chinese money, American businesses looking to grow and new innovations will be starved of capital. These are the undercurrents Trump just isn't seeing. To him, everything is vanilla. It's the world screwing the US over thanks to the trade deficit. And the answer is to tariff everyone into oblivion. But as we have seen, it has been a disaster for the US market. US private companies are going to feel the heat. They will be forced to raise money elsewhere, and chances are they will have to run to the debt markets. And if borrowing costs for US treasuries are rising, it's a disaster show for corporations. US high yield corporate bond spreads have surged to a crazy 401 basis points, the highest since November 2023. Simply put, US companies, they have to pay 4% more to borrow money versus the US government. So if Bessent can borrow money at 4.5%, US companies will have to pay 8.5% or even more. That's extremely risky, especially if rates continue to rise if Trump goes crazy again. And that's why Chinese money is just so necessary. Direct investments from China's wealth fund reduces the need to borrow money at near loan shark rates, especially when the business climate is collapsing. Now, without Chinese capital, many companies would collapse because funding would simply dry up, and the urgency to get funds really goes through the roof, especially during a crisis. Now, this chart of US credit spreads is important and focus on the lower section. Every time we have a crisis, the cost of borrowing flies to the moon. In the 2020 pandemic, companies had to pay 10% above the treasury rate. And good luck trying to borrow money when we get into a credit crisis. That's what happened in 2008 in the mortgage meltdown. You have to pay 20% more to borrow money. These are loan shark rates you get off the corner in the dark alley, but you probably have no choice but to do so. Where else can they get capital from? Apart from just the investment risk, Chinese investors also have another headache to deal with. It's the exact same thing Russia and Putin face, and yes, we are talking about asset confiscation. A court in Missouri found China guilty for the pandemic and they fined Beijing $24 billion. And the AG there is threatening to seize Chinese assets across the US, including farmland. All this raises big questions and counterparty risks. Even if China's wealth fund gets the deal of a lifetime, is it really worth the risk? The US can always reach in and take your stuff, especially when it comes to national security, especially when your investments are on US soil. So we can see how disastrous things can really get. China decoupling isn't an event with zero consequences. Beijing just doesn't want to fund American innovation and they don't want to benefit the US economy. They definitely do not want to subject themselves to the risk of sanctions as well. You can literally hear the panic in Bessent when he spoke at the Global Finance Forum. It's basically a cry for help telling the world that the US still needs their trade and money.
This morning, I will explain how they can provide that leadership to build safer, stronger, and more prosperous economies all around the world. I wish to invite my international counterparts to join us in working toward these goals. On this point, I wish to be clear. America first does not mean America alone. To the contrary, it is a call for deeper collaboration and mutual respect among trade partners. Far from stepping back, America First seeks to expand U.S. leadership in international institutions like the IMF and the World Bank. By embracing a stronger leadership role, America First seeks to restore fairness to the international economic system.
So there you have it, a very confused message about please don't abandon us, but yet asserting that the US wants to lead the world in financial matters. The real slap to the face came when Bessent talked about mutual respect with trading partners. I hope that's a joke because the last 4 weeks were the complete opposite of that. But let's do an update to the China trade tariffs, and I hope you didn't believe it wholesale because the US, well, they just did another U-turn again. Bessent now says there will be no unilateral US offer to cut tariffs on China, and this is truly a sleazy move from the US Treasury. And that, of course, sent the markets cratering. The White House is in a state of confusion. They don't know whether they're coming or they're going. One half wants tariff relief, the other wants China to bow down first. And according to Bessent, the US will not make the first move to lower their ridiculous tariff level of 145%. Apparently, the ball is in China's court and it will take 2 to 3 years to reach a deal. By then, the US economy would be neck deep in a recession, and this is a global pump and dump. At this point, the White House is just playing games. The underlying intention is still very clear. Trump wants Beijing to call him to start the negotiations. Nothing has fundamentally changed. No wonder China is cutting everything away. You just can't get a straight answer from the Americans. Even at this moment, at this critical juncture, preserving ego and face is more important than the tariffs that are destroying US companies. It's important to quantify what the final tariffs will be to get an idea of things to come. Even after 2 to 3 years, will the US and Chinese economy decouple forever? Once again, the message is really messy. In the White House today, confusion is the name of the game. The Wall Street Journal gives us an idea of the mess. For items the US deems as not a threat to national security, the tariff could be 35%. For those that strategic to American interests, prepare for 100% tariff. Regardless, we could see the effective tariff rate on Chinese goods to hover between 50 to 65%. And this isn't good news. It's still the highest in the world, and you have to slap those on top of the existing tariffs. So make no mistake, even after the cuts, the US and China would still be fighting a trade war. Nothing fundamentally has changed, just a bunch of investors who got burned chasing the false rally. We are back in the twilight zone and the USS Armageddon is firing once again. We have confusion and nonsense blanketing the world. If Trump thinks Beijing will pick up the phone and kowtow, he better think again. If you think Russia is patient, China has even more patience to wait out the US tariff war. They will squeeze the US financially while Trump does his own squeeze on US trade. And at this point, I think the odds of a US recession just went through the roof. And I want to end this with yet another speech by Ronald Reagan. I guess he was right about the dangers of a tariff war.
Our peaceful trading partners are not our enemies. They are our allies. We should beware of the demagogues who are ready to declare a trade war against our friends, weakening our economy, our national security, and the entire free world, all while cynically waving the American flag. The expansion of the international economy is not a foreign invasion. It is an American triumph, one we worked hard to achieve and something central to our vision of a peaceful and prosperous world of freedom. After the Second World War, America led the way to dismantle trade barriers and create a world trading system that set the stage for decades of unparalleled economic growth. Yes, back in 1776, our founding fathers believed that free trade was worth fighting for, and we can celebrate their victory, because today, trade is at the core of the alliance that secure the peace and guarantee our freedom. It is the source of our prosperity and the path to an even brighter future.
But as always, let me know what you think. Will China fully decouple financially with the US? And what is Scott Bessent even doing with US trade policy? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.